In this video, traders, we're going to look at buying in a bear market. Stay tuned. Hey guys, warm welcome to you. So, question from a subscriber here, and do appreciate all your questions that come in. Thank you very much for this one. Now, I did a previous video, go and check it out if you haven't yet already, where we talk about buying stocks in a bear market, which is a little bit of a different strategy. We talked about talking about different sector rotations, perhaps having different strategies of buying inverse ETFs to sort of hedge yourself a little bit. If that's what you're thinking this one's about, it's not, go and check that one out. If, however, you're talking about trading one specific market, whatever that market is, then this is the video for you. 6 things to look out for when you're buying in a bear market, whether we're talking, it doesn't matter what it is, could be stock, could be a currency, could be a commodity, could be anything. This is if the chart is looking dreadful and you want to buy, what's the procedure? Now, I just want to put it out there that, guys, the trend is your friend. And I know we say it loads of times, and if you're subscribed to the channel, by the way, much appreciated. Thank you very much for your support, guys. But you probably watched a video where we talk about trend is your friend all the time. We talk about quotes from some ultra successful traders out there, some wealth managers, and they all say the same thing. So you've got to really have a damn good reason to be buying in a bear market. You know, this is not against the gentleman who sent in the question at all. This is just because we're just all thinking about these kind of things as traders anyway. We're all trying to learn and find the best process. But you know, if you're in a bear market, stay short. Look for shorts. Okay, it's easier said than done. Stay short. Yeah, stay short till right at the bottom tick. Yeah, well done. No, I get it, but unless proved otherwise, don't be buying stuff or looking to buy things, because this is how we do damage. We buy stuff too early, we get hammered, and rather than, it's short, it's low. Yes, it's low, it's extreme. Everyone's saying how low it is. The media's going, oh, the end's never been this low, whatever the instrument may be. Who cares? Look at it technically. Don't start chasing shorts, but just shorting rallies until it doesn't happen, and then you can flip it. But okay, if for whatever reason you want to buy this asset and you've had your short juice out of it and now you're thinking of flipping to long, 6 ways that we can kind of do this to mitigate the risk. But I just wanted to put it out there that if it's that clear, then wait until it's even clearer to go long. And actually I've put this in a part 2, but don't ignore the fact that the short side is the more profitable one while that downtrend is there. And actually, let's just get straight into it. Number 1, it always goes lower than you expect. So when you think you've got the low, this is when the shorts should be pressing even harder, because what happens is this is the kind of thing, and guys, I've lived through several things of this on both sides of the coin, being brutally beaten, doing the wrong thing, and then realizing, you know what, why don't I join the side who are making a lot of money out of this? So market's going lower, everyone's saying it's really, really low. You get people buying in, The big guys, or the big money flow that's coming in, they've already allocated cash to get out. They have to get out of it. They don't care the price, whatever it is. Maybe some big investors have pulled billions, whatever, it doesn't matter. The point is, that's the way it is. And so you get these little bounces here. People are here going, oh look, call this point 1 if you like, not relative to that, but point 1, oh look at this is the low. It's like, oh mate, I haven't seen this for multiple years. It's really undervalued. Everyone's putting their 10 pence worth in, and they're writing articles and they're putting out videos and saying how it should be a great buy. And you get a little lift and everyone says, yeah, I'm great, I bought it at this and it's gone up and I'm a genius. And it's just the start of what is about to be a bloodbath, because all those people who bought into that and the overselling that's coming in then cause another wave of it. These ones go completely quiet who bought there. They're covering their positions wildly, or they're adding, most likely, and then eventually they go quiet because they just have to vomit the whole thing out because they're in so much loss. That's when the juice comes in as a short seller. So remembering it always goes lower than you expect. So if you must just align yourself with long, wait until almost the 4th time you think it's as low as it can go. I'll talk about multiple, not just days, but just intraday, but multiple periods of time. So it's like, oh, this is really, really low. There's another leg. Oh, this is ridiculously low. There will be another leg, and there probably will be another leg when you just think, wow, this is way, no one could expect it. Because the chart, if I could draw it, let's see if I can draw it here. Oh, let's keep on this one. The chart will look like that, right? And everyone will be going, that's the most bearish chart ever. But I'm just going to try and line out where my low is on the screen so you guys can see. Then the chart will suddenly do this. and exaggerate that by 10 times and you'll get like this pattern. Yeah, imagine that that chart is that pattern there. That's what it'll look like, and you'll be looking at that thinking, I was looking at that thinking that was low, and now if I put it into context of where we've gone, look where we are now. That's when you want to nail the long, have a crack at the long side, not when everyone else is thinking it's thing. You want to do it here when everyone thinks the world's ending and is about to explode. That's when the buy is, and I've seen that so many times, guys. There's examples of this kind of stuff all over the place. If you dig back and have a look at any bear market condition or any time that that's happened, that looks like a bearish chart. And then when you look at it again in the context of the bigger move, you think, wow, I can't believe I thought that was bearish. It's gone like 5 times as much. So back to the point, I'm waffling on a bit. Back to the point, it always goes lower than you expect. Can you tell that, you know, I've had some experience of this kind of stuff, right? Number 2, wait until the turn. So, you know, timing this thing, it's hard, it's tricky. So why don't you wait until the turn? And okay, easier said than done again, you know, put it in context of what it is, but waiting until you some kind of bottoming pattern and playing off a distinct level. You know, wait until some other buyer commits. Yeah, you're not going to get the low tick, but do you want the low tick? You want the most high probability chunk. You're not going to be a hero here. So wait until there's some kind of visible turn there that you can use as leverage to get onto. Scaling slowly. So if you have got a plan, you know, don't just go all full boat straight away, and be careful with the margin as well. I didn't put that in there, but just be very, very careful. It's nothing worse than going in, stopped out, going in, stopped out, one more go, going in, stopped out, then it turns and you've lost your full amount, and you could have actually done all right out of it, had it white, but you just off by a few days or whatever it may be. Consider scalping out half. So if you're good at reading shorter term stuff, consider going in, scalping out half, holding it, and then coming out. If that doesn't go, consider playing that. So you're constantly kind of feeding some money into the system, you know, using that money for you know, profits to come back in. Reinvest again, you try again, you try again, try again, and just taking that short-term movement can at least keep yourself going that way. Right, number 5, go to the second tier. What do I mean by that? So, I mean, if this is, let's say it's a market, a broad index, and it's getting hammered, rather than going and trying to time this, look for what is less volatile and is slightly lagging. There's always something, guys. There's always something. It could be a specific sector that's just a little bit lagging the broad index. It could be, if it's a currency, it could be a specific sector within that. You could be having to go to bonds. You could have to go to a different commodity. There will be something there. Maybe, you know, gold. If gold's doing this, perhaps you look into silver, you look into platinum or copper or something that's bullish, let's have a way less brutal chart that you can trade on that. So you time it on the brutal chart, on the bear market, but then you look at something that's similarly correlated but is stronger and buy that on the turn, because that's the thing that will see the bid quicker. All right, number 6, the final thing is plan your strategy. It's the death of many people who come in, play this game, they don't plan, they lose a lot of money, they're so close to getting it right, and they've missed the opportunity and they're so frustrated. Plan it, plan it, plan it. How much you're going to risk, how you're going to reassess, when you're going to stand out, all those things need to be taken into account. Anyway, guys, 6 tips, if you like, for buying in a bear market. If you like this kind of stuff, thumbs up. Subscription is appreciated if you haven't already. Thank you very much. Like and appreciate your support. I'll see you next one, guys. Bye-bye.